Let's dig a little bit more into the expectations for the Fed, because yes, indeed, they're not expected to make any change on policy. But as always, we'll be looking for the nuances within what Jay Powell has to say. Brian Cheung is our resident Fed watcher, and he's with us now. So, Brian, what should we be looking for?
Yeah, well, Julie, it is another FOMC meeting. It's been 6 weeks since the last one. So without further ado, here are my FOMC three, the three big questions that I'm fixated on in that meeting. Again, the press conference will happen at 2:30. But the first question, when do we reach the light at the end of the tunnel? We heard Chairman Powell say that in the press conference on December 18th, that the first half of this year was going to be difficult, but that the vaccinations should allow us to get to the light at the end of the tunnel in the second half of this year. But the question is, with the vaccine rollouts and the issues that we've seen around distribution, how long is that tunnel going to be? Let's get an update on that in today's meeting. Coming in at number two, how high is too high when it comes to bond yields specifically, of course? We've seen the 10-year yield since that last FOMC meeting really tilt quite higher. Actually, when we got to around the middle point of January, the 10-year, for example, was as high as 118 basis points. Are those longer term borrowing costs going up to a level where the Fed might want to tilt its asset purchases towards the long end? And that kind of blends into my number one question here, which is it too early for the taper talk? We've already heard a number of Fed officials like Atlanta Fed president and FOMC voter Raphael Bostic saying that they might be able to pull the punch bowl away at the end of this year and begin tapering that $120 billion a month pace of asset purchases. But Chairman Powell, for his part, seems to hint that it's a bit too early to be talking about that tapering, that we're still far away from our goals. But of course, he might be doing that because he wants to avoid that Ben Bernanke era taper tantrum, which many people will remember from about 7 years ago. So that's going to be very much in view. Those are my FOMC three. Of course, everyone wants to hear about GameStop. I personally will not be asking the chairman about his price target on that stock, but I do think it could be interesting within the context of maybe financial stability, what the Federal Reserve thinks about some of these market structure changes.
Well, I mean, Brian, on that point, do you think someone will find a way to ask that question? And I know that the Fed has, there's the shadow third mandate, which is, financial stability. And people interpret that as, oh, they got to make sure that stocks go up. But is there a way for the Fed to even play in this conversation? I suppose in 5 years, we'll just see the transcript of this meeting. And I'm guessing someone referenced it over the last 2 days.
Yeah, there's probably going to be at least one bracketed laughter when it comes to that discussion in this meeting, which, again, we won't get the transcripts until 5 years from now. But I think you raise an interesting question, which is that financial stability is the bridge for where the Federal Reserve would care about this. And I think we have to parse out what is really a market structure question that's really more left to the SEC when it comes to whether or not this is a pump and dump scheme, whether or not Reddit should be forced to file a 13D. I mean, I'm half joking in that case, but those are not questions obviously for the Federal Reserve. And I don't think Chairman Powell would be even close to wanting to comment on the movements of an individual stock, be it GameStop or whatever stock du jour is moving off of Wall Street bets. But I think it's an important question that I think the Federal Reserve might want to tackle when we talk about, broadly speaking, is this enabling zombie companies to exist? That was something that factored in to the Fed's decision to have those liquidity facilities and ultimately close them at the end of the day. When you look at some of these companies, they didn't want to prop up zombie companies through a financial crisis, for example. So is that happening with GameStop? Is that happening with AMC? I think those could be broad questions that the Federal Reserve might want to start thinking about if there is, for example, a trigger of widespread defaults, if all of this ends up coming down in a house of cards. So I think that could be one bridge for him to be answering that question. But will I be asking it? We'll see. I'm usually towards the end, so we'll see. Maybe I'll keep everyone on their toes.
Well, look, at least Pat Toomey was able to go out and close those facilities, so that we can't have the Fed liquidity facilities blamed as some part of this. So everyone can go home happy there.
I'm sure someone will try, as they not that, but the Fed more broadly, I guess. All right, Brian Cheung, thank you very much. Look forward to some kind of question this afternoon for Jay Powell from you. Appreciate it.